everybody. My name is Mikhale Fisher, and today I'm going to be talking about how you can build generational wealth. Before I get started, I just want to thank Phil for the platform so I can speak today. And before I get started, let me just share a little bit about myself. I didn't come from this industry. I started out like anybody else would, just live to my parents, right? So they came here from immigrants from Jamaica, and they really just told me to go to school and get a job because that's what really worked for them, right? I did that. I went to school at Montclair State University for business finance while also working as a personal trainer. But I felt like I wasn't really learning what I needed to in school. I ended up going as a personal trainer, and then I did learn much going there. But I found that I liked it because I like people. I like helping people achieve their goals when it comes to health. And then someone introduced me to this company, and to be honest, like I didn't really know what it was, and but they really just sat down with me and showed me why the rich are rich and why the poor are poor. And I'm going to be showing you a little bit how you can build generational wealth today too. If you would allow me to share my screen, Phil. Okay. Yeah, so today I'm going to be sharing about how you can build generational wealth using life insurance, right? As I said, I didn't come from this industry, and to be honest, when I got started in the industry, I didn't really know that I was going to be doing life insurance. I didn't really wake up saying, "Hey, I'm going to be a life insurance agent," right? But our company got started. We're called PHP Agency. Our name is People Helping People, and we got started in 2009 from our CEO, Patrick Bet David, and he came as an immigrant from Iran, and he really had a vision for this company to include a lot of diverse communities so that we can also be involved in financial services as well. This company was really created for people like me and people like that are minorities and of a diverse background so that we can market to our communities because the average agent in the insurance industry is typically an older white male, right? So when I got started, I really saw the help that we're doing in the community, and it really just I fell in love in what we do. So let me get started in showing you how you can do that as well. So what is life insurance, right? So basically, life insurance is just a legal contract between you and the insurance company, and it provides financial protection for your life if you were to pass away. The insurance company, when you agree to get a life insurance contract, you agree to the insurance company agrees to pay a death benefit upon passing of the insured. In other words, a lump sum payment is paid to a specific recipient, right? You're going to get a set amount when you sign up for life insurance. Uh, Now, life insurance may also offer living benefits, which allows you to assess money in a policy prior to death, right? So if you get a critical, chronic, or terminal illness, you're actually allowed to use the money in your policy so that you're able to use for your expenses. So there are five reasons why you need life insurance. One is to protect family income. So let's say you need to pay for your family's income right now. You're the primary you're the primary source of income for your family. If you're to pass away, your family would need some sort of income to help pay the expenses. So that's one way. Second way is to pay off any liabilities. So let's say you have any debt or any student loan debt or credit card debt. You get life insurance so that your family doesn't pay off that debt for you, right? Three, to cover an education fund. Let's say you have any kids, you're looking for them to go to college or anything. You want them to be covered if anything were to happen. You would want them to seek out education. And right now, colleges are going up in price, so it's really important that you set aside an education fund so that if anything were to happen to you, your kids would be able to have an education. Number four, to create an emergency fund. So this is, if anything would happen where you lose your job, or something happens to you, like I said, you get living benefits, so you're actually able to access money in your policy while you're still alive. So if you get in an emergency, you're able to access that cash. And number five, my favorite one, to build retirement income, and this is can be potentially tax free. So these are the main five reasons why, and I'm going to be showing you what different types there are. And there's some common misconceptions when I'm talking about life insurance, right? So the first one is it costs too much, or I can buy it later. Life insurance may cost less than the amount you actually spend on your phone bill, right? So when I'm sitting down with people, it's really their priorities. You see the brand new car in the driveway, the big flat screen TV, but they don't have any life insurance, and that's really because their priorities aren't where they need to be. Number two, I have enough life insurance coverage, maybe through work, but at the end of the day, cost of living is going up, inflation is going up, so you constantly need to reevaluate your current plan that you have. It's actually 50 million households say they need more life insurance. Isn't that pretty crazy? 50 million households, right? And number three is I'm covered at work. What does that mean, right? So maybe you have a plan at work, right? But that's really only term. They usually only give you term, which I'll explain how term works a little later. But the death benefit may only cover 1 to 3 times your salary. So what does that mean? 1 to 3 years. If your family can't, let's say you have a 5-year-old and you need to cover them for at least 12 years or something. 1 to 3 times your annual salary is not going to be able to suffice in that situation. So really, the time is now. How life insurance works, the younger you are, the better, and the cheaper it costs, right? So it really goes down to your age and health. And second one is healthy, right? So the healthier you are, the better. If you're super healthy, right, you're gonna get a better rating, um, and the premiums will be lower. And you're always one doctor's visit away from being uninsurable, right? So what does that mean? So you may develop an illness that will prevent you from qualifying for a plan, right? So let's say you get a stroke. If you get a stroke, you have to wait at least 6 months before you apply for a life insurance plan. So you never know what happens. So I always say the time is now to get a plan. There are different types of life insurance. So we at PHP, we're actually a brokerage company. So we're not an insurance company. So we partner with companies like National Life Group, AIG, American National, Mutual of Omaha, Fidelity Guaranteed Life, National Western, Americo, Columbus Life, and Global Atlantic. So we work with a lot of these companies. So we sit down with people, we assess what they need, and if a certain company doesn't work with them, we can work with another company. So let's say I work for State Farm, right? If I work for State Farm, which products do you think I can only offer you? It's only State Farm, right? So um, when we're sitting down with people, we're really just sitting down so we can assess what they need and put a plan in place. But the first type of life insurance, there's a new type of life insurance. The first one is term. So it works like this. So you're sitting down with a 34-year-old woman and she wants a $500,000 policy. This policy, she's going to be paying $30 a month for this. What does that mean, right? So If she were to die in the next 30 years, her family would receive that $500,000. But if the lady doesn't die in the next 30 years, guess what happens to the money the client was paying? It's gone. The money's lost, right? So this one, the advantages is that it's affordable, but the disadvantage is that it does expire. And let's say, we're a really expanding company, so we're looking for more agents. So let's say you're with us, and this is how you get paid on a policy. So we actually get paid a year in advance. So she's paying $30 a month times 12. That's 360, right? So companies like National Life Group, they pay us at 115% contract, right? So that's $414. Let's say you're with us at an average contract of 50%. You just made $200 in 1 to 2 hours, right? So this is what we get paid. The insurance company pays us. We're not getting paid out of the client's money. The insurance company pays us because we're doing the marketing. We're sitting down with people that they can't get in contact with, and they pay us a premium because of that. The second one, this is called ROP. How does it work? It's the same 34-year-old lady wanting the same $500,000. So for this, she's not going to be paying 20, 30, or 40, right? She's going to be paying double or triple. So let's just say she's paying $100 a month for this. That's so if something were to happen to her in the next 30 years, her family would receive that $500,000. But if that lady doesn't die in the next 30 years, guess what happens to the money the client was paying now? She actually gets a full refund. How much back, you're probably thinking, right? So she's paying $100 a month times 12, that's 1,200. Times 30 years, that's $36,000 back. We're going to write her a check for $36,000. So if I were, maybe I work at a car insurance company, right? And I call you, I say, hey, sir, hey, ma'am, we have a new car insurance. If you get in an accident in the next 5 years, we'll pay for it. But if you don't get in an accident, we'll give you your money back. Would you buy that? Right? Probably you would. But it doesn't happen in car insurance, right? But it does happen in life insurance, right? So how we get paid on something like this? She's paying $100 a month. We get paid a year in advance, 1,200. 1,200 at 115% contract. American National pays us at this. That's 1,380 that we're gonna get. Let's say you're with us at a 50% contract. You just made $700, right? So when I'm looking for people that want to make a part-time income, you help one person a month, right? You get $700. How would an extra $700 feel in your bank account? What would you do? You do a lot of things, right? So that's the second one. And if I were talking about, if I were selling cars, right, term would be a basic four-door sedan. It'll get you from point A to point B. Nothing crazy. The ROP, this would be like a Lexus or a Mercedes, a little bit more luxurious, right? So, and then the third one, right? This is going to be your Ferrari or a Lamborghini, right? Everybody wants this. You get member benefits. This is like the best of the best when it comes to life insurance. So, um, sorry. How does this works? You get a death benefit, which is forever, right? It's always going to be there. You get living benefits, which I covered earlier, which covers you if you get a heart attack, stroke, you lose eyesight, anything, a critical, chronic, or terminal illness, it'll cover you. And number three, it has cash value, right? So what is cash value? You're probably thinking, right? So in this account, your money's going to be growing anywhere from 5 to 9%, and you're over time you're actually able to access it income tax free. So how does it work? Let's just say the same client was paying $200 a month for this. So half of it's going to be going to the death benefit, right? But the majority of it is actually going to the cash value. So let's say over a 20, 30, 40, 50 year period, you're able to access it tax free. And some policies actually have a lifetime income rider. So you can actually get income from this until you were to pass away. So how do we get paid on something like this? $200 a month times 12, that's 2,400 bucks. 115% contract, 2,760. 50% contract with us, you just made an extra $1,400, right? So it is a very big income potential with the life insurance industry, because you can make a lot of money just helping out one person, right? So this is great for anybody who wants to make part-time income as well. And there's 5 easy steps on getting a plan in place, right? So one is to contact a licensed insurance agent like myself or someone else you work with. Schedule an appointment to assess your needs. Create a plan customized to achieve your needs. You put a plan into action, and then you review your policy each year because new things may happen, right? And again, if you want to contact me, my email is here, mfisher.php@gmail.com. Phone number 914-924-7541. My Instagram is Mikhale.Fisher. So if you need any help, we're also looking for more agents. So if you're looking to get a part-time job or anything, feel free to contact me. But with that being said, thank you for taking the time out and hearing what I have to say about building generational wealth.